Trading was hard until I realized that I was overcomplicating it, and then it became easy. I've been trading for 4+ years, and I've come to realize that 90% of the traders overcomplicate everything. They learn hundreds of different strategies and concepts that simply don't work, and they waste years and a ton of money looking for something that doesn't exist. Honestly, I wish that I would have seen this video back when I wasn't making money, because this would have saved me years, because I was losing for 2 years before I perfected my 3-step system. But at least now I can make sure that you will become profitable faster than I did, because today I'll reveal my 3-step system along with live examples on how I implement this to my trading every single day. But let's not waste any time. Let's get straight into the video. So we have to understand that trading is not complicated. It's just simply misunderstood. Like I said, today I'm going to reveal my 3-step system I used to make $25,000 per month trading, and it's going to go like this pretty much. You start trading, and I'm going to show you the 3 steps, 1, 2, 3, and then you're going to become profitable, because this is so simple but yet so powerful. Okay, but now let's start. So pretty much there's only 2 main reasons for failure in trading. Number 1 is that you lose more trades than you win. So in this example, let's say trader A loses 11 trades, right? There's 11 losses and there's 2 wins, and let's say each trade he loses $100, right? Or makes $100, right? So obviously that's not profitable, because he loses $1,100, right? And then he wins only 2 trades for the month. So total for the month, he's down $900, right? So that's not profitable. And I'm gonna very soon exactly show you how you can fix this, because it's a very easy concept to learn. But also we have to understand there's a second scenario where you're not profitable. You lose big when you lose. Okay, as you can see, the win rate is amazing, right? There's a bunch of winning trades for the month and only 2 trades that were losses. Well, how can this actually be unprofitable? He wins 14 trades and he loses 2 trades. So that's an amazing win rate, right, for the month. But the thing is, he's very inconsistent with the risking, and he has a bad risk-reward ratio, risk versus profit. So he has a negative risk-reward ratio, and he gets emotional, etc., etc. So he starts to risk a lot. Even though he wins a lot of trades, he loses more money in those few trades that he loses, right? 2 trades. So that's not profitable, right? We have to find that balance. We have to be profitable. So what exactly is the solution? So the first step is that we have to find a simple and profitable strategy, which I'm going to now show you. But this is the first step. There's more into this video, so stay tuned, because this is not the only thing you need to become profitable, but this is a very strong step. So the basics of the basics. To become profitable, you always have to follow the trend. Take advantage of the trend, because that's there, right? Follow the trend, right? I have more videos on this, but this is the basic, right? There's 2 trends in the market, right? Market trend is the lifeblood of the market. There's the uptrend, and then there's the downtrend. Uptrend you have to follow, downtrend you do obviously follow. So downtrend you sell, uptrend you buy, right? Follow the trend, hop on the moving train. So in the trend, how you spot it, there's 2 parts, right? There's the big move and the small move. Big move, small move, big move, etc., etc. The big move is called an impulse. Small move is called a retracement. Impulse, retracement, impulse. Same here. There's the impulse, retracement, impulse, retracement, impulse, right? The reason why we need to understand that is because every time there's an impulse followed by retracement, there's going to be a high. And then when an impulse closes above the most recent high, that's a breakout structure. We can enter off of here or wait for a retracement and enter off of here and put the stop loss below here. Okay, I'm going to show you exactly how you can do it. But remember, this is the first step. This is very important. Okay, you need to have a strong strategy, a strong foundation to your trading, that strategy, right? I'm just going to show you the trade that I took today following the trend. This is very, very important, right? And this made me $1,100, right? So how did I do it? Obviously, what is this? This is an uptrend. Start the beginning of the uptrend, right? We took our liquidity, then we start to create this uptrend. This is a higher high, impulse, retracement, impulse, right? What happens then? We create this high right here, and then this impulse closes above the most recent high right here, as you can see. So what is that? That's a breakout structure, but the risk-reward ratio wasn't too good in that moment. So I waited for the price to retrace to this area, and I entered right there, and then I got 1 to 2 risk-reward ratio, 1 to 2.2, right? And that made me $1,000 and some bucks right there, $1,100, right? That's the uptrend, right? That's how you follow the trend. Remember, you need to always hop on the moving train. Obviously, I have a bunch of videos on that, how you can follow the trend better and take a bunch of trades. But this is the first step, right? Build the foundation. So I'm talking about the trend, right? And then if you want to follow the downtrend, same thing, but to the downside, right? So what is this? This is a low lows, low highs, low lows. We create a low that will close below that. Why is this a low, first of all? Because remember, how does the trend move? It moves in, look at this. It moves in impulses and retracements. When there's a retracement in the trend, it creates a low. And when the impulse closes below that, we can see that break or structure and we could enter. But in this case, obviously, I wouldn't enter right on there because the risk ratio wouldn't be too good. Look at this. The risk ratio would be kind of right? But let's say hypothetically, I would enter when the price reaches a little bit here, right? Like this, and I would enter right there. Let's see if we get a 1 to 2 risk ratio. In this case, we follow the trend. Eventually goes there, right? Look at this. Eventually goes there. Bang. 1 to 2 risk ratio. But that's just an example, right? The point what I'm trying to make here is that you need to follow the trend, okay? That's the first step. Follow the trend. Keep your strategy as simple as possible because now we're going to move into the more advanced steps that actually turns your trading profitable. Because understand, you can have a great win rate, etc., with this strategy, and you can still be unprofitable for the month. Only once you take the steps that I'm about to show you and share with you, then you'll be able to be unprofitable because there's a lot of more things involved. So let me get to the step number 2 now. We have to understand balance, okay? Risk-reward ratio, remember that. Risk versus profit. Right there, I showed you 1 to 2 risk-reward ratio. So I double my risk basically if I hit the take profit. You get the point. And win rate, okay? You need to find that balance because there's people who can be profitable with a very high win rate, but a very low risk-reward ratio. They can be profitable with that, okay? But you just have to be consistent if you choose it, okay? Or there's a lot of people I know that have a freaking 20% win rate. They lose 80% of their trades, but they still manage to be profitable because they have a high win rate. High risk-reward ratio. So let me show you exactly how it's done. So this is a risk-reward ratio and win rate cheat sheet. We have to understand this. This is so important. This is like the foundation also to your trading. So this is step number 2, okay? Alongside with your strategy, this is one of the key pillars, okay? You need to understand this. So right now it looks kind of complicated, right? But what we understand that this is the risk-reward ratio right here, risk versus profit. So when you enter the trade, let's say there's a 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5, etc., and etc., right? 1 to 1 is not too good in my opinion. I'm gonna be completely honest. I know people who can pull it off, like they can make money with that, but the reason why I'm not the biggest fan is because you need to be almost every single time correct because you risk the same amount of money that you can make. So let's say this right here, let's say I'm gonna just show you right here. Let's say this is 1 to 1, right? If you understand now what I'm talking about, this is 1 to 1 risk-reward ratio. This is the risk and this is your profit. And then when the price goes, whether you lose the trade, you lose the same amount, obviously, as you risk. And if you win the trade, you lose the same amount as you risk. So it's like 1 to 1. You have to be almost every time correct. So with that, you have to have a very good win rate, right? So with a 1 to 1 ratio, 20% win rate. This is the win rate, by the way, that percentages. So if you have a 20% win rate with a 1 to 1, you're going to be unprofitable. 30%, you're going to be unprofitable. 40%, you're going to be unprofitable. 50%, obviously, you lose the same amount as you win, but it's a 1 to 1. You're going to be break even. You're not making any, but obviously, you're losing a little bit because of the fees, right? So you're kind of unprofitable right at that point. But only after 60%, you are profitable, but you're not making too much money. That's why I'm not the biggest fan of 1 to 1. You have that constant pressure to be correct every single time, right? Because even though I just recently was in a winning streak, 12-0 winning streak, great win rate, etc., I still don't need to be correct every single time because I have at least 1 to 2 or sometimes 1 to 3, depends on the trade. That's that amount, right? So I don't need to be correct every single time, but still, it's amazing, right? So 1 to 2 risk ratio is when you kind of double the risk, right? So in this case, you double, right? You double. So if it goes to your take profit, you literally double your risk. Or if you lose just, let's say if you risk $100, you lose $100, but if you win, you make $200. That's the beauty. You literally, that's basically leverage in the trade, right? And so with a 20% win rate, with a 1 to 2, you're going to be unprofitable. 30%, you're going to be unprofitable. 40%, you're already profitable. Congrats. 50%, 60%, you're profitable. Amazing. Now imagine this with a big win rate. Amazing, right? Now 1 to 3 is where it actually is kind of nice. Okay, look at this. 1 to 3, you triple your risk when you win the trade. 1 to 3 ratio, you triple your risk. 20%, you're unprofitable, unfortunately, but barely. because 30% you're already profitable, 40% you're very profitable, 50% you're extremely profitable, 60% you like making good money, right? 1 to 4 risk ratio, you literally 4x your risk. So 20% your break even, 30% profitable, etc. So 1 to 5, you 5x your risk if you win. So at 20%, you're already profitable. So the point what I'm trying to make here is that you need to find the balance. You need to find your kind of way. Now, for me, I kind of like to aim towards 1 to 2, 1 to 3, sometimes 1 to 4 risk ratio, depending on the entry, but I like to keep it at that point, right? On average, it's 1 to 2, okay, 1 to 2 risk ratio. But what you have to understand is that you have to take big calculated shots, okay? Remember the second person, right? He takes a bunch of trades right here. He takes a bunch of trades and he loses big. He's not taking those big calculated shots. He's taking small trades, but then he loses a lot. That's not big calculated shots. What you have to do is you have to take those big calculated shots. Only A+. Remember, A+, I mean you have to only take the setup when your plan says to take. Only A+ or S tier setup, the best possible setups. And that means you can risk more on those trades. And with a good win rate and risk ratio, you're going to make so much more money. This is the key pillar to trading, okay? Big calculated shots, A+ setups, S tier setups. Remember, never ever settle for bad mid-tier trades. Never trade on bad price action. Don't take those mid-tier setups. If it's consolidating, if the price is moving sideways, just ignore it, okay? Wait for the price to gain that momentum that you can follow the trend and take that best possible trade. And this is so important. Only trade on session open. Why? Because in the session open, literally the banks open, everything open, there will be the most volume, most opportunities, and most money to be made. I personally start trading at 9:30 a.m. Eastern Standard Time at freaking New York Stock Exchange Open, right? I don't trade in pre-market. I don't trade in after hours. I don't trade in this. I only trade in market hours. And to be specific, 1 or maximum 2 hours into the session open, because at that gap, there will be the most volume, most opportunities. And at some point, the price starts to lose its volume and it's kind of choppy, etc., etc. I like this one, okay? Or you can trade at PM, which starts to gain some volume as well, because there's a lot of news at that point starting around at 1 PM. But I like the 9:30 to maximum at 11 or 11:30, right? That's my sweet spot, and I recommend that. Now, if you trade Forex, you can trade those Forex sessions like Asian, London, New York, etc., etc. But be specific with the pair that you're trading, okay? If you trade GBP USD, you should trade in London or New York, etc., etc. So choose the pair and session that is suited to your personal life schedule, okay? That's a big tip, right? Now, this is so important, right? This is a recent trade that I took, right? Very recently. As you can see, I'm trading in the session open. I'm up like $800. I think I made around $4,000 in a trade or something like that, if I remember correctly. But this is so important. Don't just backtest your strategy. Actually, just show up to the live markets daily. And I recommend you to trade with real money, even in the beginning. Use that. Now that you have this video, now that you understood this, use that risk ratio, follow your plan, etc., etc. But the reason why you should show up to the live markets and risk real money, not a lot, just risk real money, because you feel the emotions kick in, your psychology gets better, your strategy gets more, you start to realize everything, okay? You start to just become better as a trader, as an individual, more disciplined, everything, all that good stuff. And you start to just realize more. And that's the key part of it, okay? Because backtesting, there's no emotions involved. There's pretty much nothing. But in live trading, it is you versus the market. I mean, it's pretty much you versus you, because you're battling against your own emotions, this and that. You start to really see how the markets move. But when you're just backtesting, I mean, backtesting is good. But when you're just backtesting, you're just doing this and that, just speeding everything up. You're not thinking too much. But in the live markets, your emotions get in your way. And that's good, because that's the best time to practice, right? That's how you get the best experience. So that was the exact system I used to become profitable, how I became profitable. And like I said, I wish that I would have seen this video back when I started, but now you can become profitable, okay? I believe in you, bro, okay? Make sure to like and subscribe if you enjoyed this video. And yeah, as usual, I will see you on the other side. Peace out.